I'm Marlon Bowling, your tour guide to the ag commodities. I'm joined by Oliver Sloup of Blue Line Futures in Chicago right now, and we'll talk about the market setup here. As we head into the close, Oliver, you know, it looks on the corn market like we're hanging in there pretty close to our highs of the day right now. Let's take a look on the corn board with our quotes provided by Bar Chart. March now at $5.91 a bushel. That's within a penny of our high of the day. We're up 5.25 cents. May up 5.25. And the nearbys are showing the most strength. You would think generally that means bull spreading. And the same thing applies on soybeans. So we have January soybeans 15 higher at 12.77.5. March not far behind. We're up 13.25, and we're at 12.78.5. I'll stop right here. Bull spreading on corn and soybeans. How bullish of a sign is that today?
Well, it certainly looks constructive, and when you look at corn, we're working a little bit higher, but we're really right back at the levels that we've been trading at for the better part of the last few weeks. 590s has been an impossible hurdle to get out above, but looking at the technicals, the more times you hit resistance, the weaker it becomes, and we often compare it to a wrecking ball against a building. The more times you hit it, the weaker it becomes. Eventually, you get that breakout move, and I wouldn't be surprised to see that happen if we can get a breakout above the mid-590s and trade above $6 for the first time since the very beginning of July. Above $6, there's really not a whole lot of resistance until you get to 616 to 620. So a lot of market participants heading into the holidays are watching this $6 level very closely, because even though the fundamental landscape and the news wires are relatively slow, there's an opportunity there for a technical breakout in the corn market.
Are the options trades giving you any clues for market direction right now?
They are a little bit, and that's something we're keeping more of a close eye on for January soybeans. We've got option expiration next week, and there's a lot of open interest at the $13 strike. There's about 10,000 calls there, so I wouldn't be surprised to see the market gravitate towards that level. But with that many calls open at that strike, I think it's going to put a lid in the market. Now, looking a little bit longer term out to the March contract for soybeans, we remain pretty upbeat. We've marked higher lows for the last month. Hopefully we can mark higher highs. To do that, we'd need a breakout above $13 to spur some additional technical momentum. Obviously, a lot of market participants keeping a close eye on weather down in South America. Doesn't seem that there's anything majorly concerning right now, but if that does get a little bit more questionable, there's opportunity for premium to come into the market. And looking at the fund positions, we know that the funds have a relatively small net long position in beans. So if there's a bullish catalyst there, funds do have powder to add.
Well, the wheat market is making up a lot of ground today. Let's look at Chicago wheat. On the big board, you have March up 16.75, Oliver. We're at 772.75. Well, that's only one tick from our high of the day. Kansas City, March 20.75 higher now at 806.25. One tick from its high of the day. And Minneapolis, March up 18 at 1027.25. It's on the high of the day right now. Is that pretty encouraging to you?
I wouldn't get too excited about wheat trading higher today. We're in a downtrending market, and we've been talking about this with clients over the last several weeks, really since we started the precipitous fall from the highs of about 875 in that March contract. Is when you fall that hard, that fast, you're going to get these dead cat rallies or relief rallies of 20 to 30 cents. And those are likely going to be used as opportunities for shorts to resell at higher prices. So we're retracing the breakdown point from yesterday in that March contract, 775 to 780. Consecutive closes out above there might neutralize our bullish bias, but it certainly wouldn't change the tide and put the bulls back in control just yet.